Tonight I want to make a quick update on the situation that we got here on the US oil. We're going to look at some technical data, fundamental data, and as well as some order flow data as well. So starting here from the technical data, so starting here on the monthly time frame, all we can see is that we can see how US oil had broken above this previous resistance that was once turned support. What happened was the market did not hold that area. However, we broke below that area in the market. You can see how the market is now testing that area again as a level of resistance, because we know once resistance gets broken, it then becomes support. When support gets broken, it then become resistance as well. Now dropping down here on the weekly time frame, what do we see? Now we can see how the market had printed this massive impulse. Now after an impulse, you obviously expect a correction before the continuation to the downside. And if you take a Fibonacci from the high to the low, you can see how the market had just pull back to the 0.382. However, what we can see happening here is we can see how the market wants to print this head and shoulders pattern as well, and it's a lot clearer here on the monthly time frame. You can see there. So the completion of the head and shoulders pattern is located at the 50%, which is lining perfectly up with that structure. Always keep in mind that when the market prints a head and shoulders pattern, the left shoulder doesn't always need to be equally high with the right shoulder. Sometimes it's higher, sometimes it's lower. So that's something that you can look out for as well. Now what we're going to do is we're going to drop down on the daily time frame. Now on the daily time frame, what can we see over here? We can see how the market is currently stuck within this range. The market obviously reacted yesterday on the negative US data that was released. However, we can see how the market is still stuck within this consolidation area, or stuck within this range. Now, before we talk about a valid opportunity that you can take on this, what we're going to do is we're going to look at some order flow data. So what the biggest banks, commercials, and hedge funds are doing in the market. Now we can see here, based off the last report, how hedge funds closed 1,288 long positions. They also closed minus 2,197k shorts. Normally when you see hedge funds closing longs and short positions, that's normally a sign of indecisive, because they don't know whether they're coming or going. And we saw the same situation on the Nasdaq 100 when the Omicron started making waves and hedge funds started closing and opening long positions, and we started seeing that ranging happening in the market. And then that is exactly what you see here now as well. Now, one thing that we do need to keep in mind, however, is that the last time when we had the coronavirus, we saw the market drop here. I think it was here where the market had dropped right below zero. So this is one thing that we need to keep in mind as well. So we've got all the rumors coming through with the Omicron virus as well, from a fundamental perspective. And if we go into this article here that was published on the 16th on TradingView, we can see a crude oil prices fall amid rapid spread of the Omicron, slightly offset by the US inventory drop, ANG Bank says. Now you can see how the Omicron is once again making it quite difficult for investors, to either buy or sell this market. Because what's going to happen if they, let's say, they want to buy the market, and then the Omicron cases starts to rise again. That means lockdown comes, a national lockdown. People can't leave the house, people can't drive anymore. So that is going to be a loss for them. So I think for now, the market's basically waiting to see what impact the Omicron virus is going to have as well. But alternatively, so there's two ways that we can approach the situation. The first thing is to wait for clear break above the structure from a daily perspective. Then on the retest, you can look for potential longing opportunities from there. Alternatively, what you can wait for is the sell as identified on the monthly time frame, based off the head and shoulders pattern that we have identified on the monthly time frame as well. And if you are looking for a target, so the target level for that would be located at the minus 27 of the Fibonacci taken on this daily impulse. So that target would sit right there, and that will also give the market to create this lower low. And then from here we could see a pullback testing the the previous support that then got broken, completing the head and shoulders even further. So that is how you can look at taking an opportunity in this market. But for now, the best thing to do is just to sit on your hands, because the market is currently stuck within a consolidation. The best thing to do, like I said, is wait for a clear break and close above either structure, and then start looking for longs or sells. Long or selling opportunities on this market. Also, if you're new here, a subscribe would be very much appreciated. Don't forget to smash that like button, and as always, let me know down in the comments below what it is that you would like for me to cover in the next video. And thank you so much for your time. Have a beautiful day, guys. God bless you, and cheers for years.